This is Alfred Edmond Jr., SVP and Executive Editor at Large at Black Enterprise with another edition of Beyond the Hype. I have a great guest, and we're going to be talking about a really fascinating subject for this particular time. Lorene Pendleton, who among so many other things, we're going to talk to her about the things you've done to get to where you are. But right now, the biggest thing is that you're one of the leaders of a new fund, a new venture capital fund, led by women of color, the Rising America Fund. And so we want to talk about that in the context of the current environment, particularly as there seems to be a renewed focus on disparities and inequities for Black business owners and Black entrepreneurs. But before we jump into that, let me lay out what the hype is, in my opinion, for this conversation. And the hype is this, that capital flow is a meritocracy, that the best ideas attract the best money, and it doesn't matter whether you're male or female, Black or white, gay or straight. The profit motive and the marketplace reacts to what is really the best ideas, and therefore, what's the problem? Why do you need a fund that's focused on women? Why do you need a fund that's focused on people of color or Black people or people of different gender orientation or sexual orientations? Why do you need that? That's the hype. But then we look at the stats, and less than 1% of venture capital monies end up with Black entrepreneurs or any diverse entrepreneurs. Frankly, 1% is probably generous. And it's the year 2020. And let's add to that backdrop now the aftermath of the George Floyd murder. The spotlight that and the pandemic has thrown on the great disparities that are still part of this country, particularly in African American communities. And then we have your new fund. So let me start out with, what about this idea that capital flow and capital access, when all is said and done, is a meritocracy? If you have the best idea, you're going to get the capital.
Right. Well, I mean, the fact that you just said less than 1%, of VC funding goes to Black founders, so, I mean, that in itself, and then if you look at Latinx founders, 1.5%, but then if you look at the demographics in the United States, people of color, it's a large demographic. So, I find it really hard to believe that only a certain group of people are coming up with the best ideas in this country. Particularly when you look at, endless studies have shown that organizations who are diverse, so companies and any type of organizations who are diverse, those companies actually perform better, in terms of revenues, and perform better than companies that are homogenous. So, tend to be just one group of people. And so, the argument is that we need to make sure that we have diversity, and not just because it's the right thing to do, which I agree with, but because also it makes business sense. And companies and organizations that have diversity, whether it's all types of diversity, whether it's, people who have, maybe have come from immigrant family, or age diversity, or, gender, ethnicity, all those things, basically people are coming to the table with their experiences that differ from other people. And so I think you'll solve problems because people are coming in with different perspective. If everyone thinks the same, looks the same, you're probably going to come up with the same solution. So, this notion of, let the people bring the best ideas, and the best ideas are going to be the ones that get funded, it's just not, it's a fallacy. Particularly if you look at, VCs, if you look at the makeup, just talking about African Americans, it's only about 1% who are in venture capital, who are partners who make these decisions. And so most of the VCs in this country, traditional VCs, are led by white men, barely have women. So, if you want to even talk about gender diversity, there aren't that many women. And then, the racial ethnicity, if you're talking about Black and Latinx, there's barely anyone there. And so to think that these are people who, this group of people are the ones who are making the investment decisions of what companies in this country are going to get innovation, companies that are innovators are going to get money, that it's basically decided by, one group of people. And so if you look at networks, most of these people have the same networks. They've gone to the same schools, if you look at Silicon Valley, a lot of them gone to certain schools, Stanfords of the world, MITs, so their network, if you look at companies that get funding, a lot of those companies have gone to those schools, although people of color do go to those schools, don't get me wrong, but, again, it's a network. And so by definition, some people don't have access to that network. So that's really what it comes down to. It's really not about the best companies getting funded. Of course, there are great companies that are getting funded. I'm not saying that. But what I always say to people is that, talent is equally distributed, opportunity is not. And so, it's important that we look at who's making these investment decisions. We need to think about diversifying the people at these VC firms. And then people like myself who've been, in this game investing, supporting people like me who've launched funds, who are looking at this and investing in this asset class.
So, I mean, you hit a direction I really wanted to go in with my next question, because, I mean, I've been a big fan of yours for a while. I told you that.
Thank you.
Mean, you're just, and it's like when I say I'm a fan of yours. So take away that you're Black, that you're a woman, that you're in this environment where, I mean, it's not a good thing, but it's a notable thing that you're rare. You're rare just based on that. But take away that, you're brilliant. I mean, this is me, so I'm a fan. So if I geek out a little bit, guys, just roll with me. But you spoke at a Black Enterprise event several years ago. I've been following you. I'm also a fan of one of your colleagues, Nora May Kadena. We judged a business pitch competition together several years ago, and I've just been a fan of hers ever since. But both you and your colleagues leading this fund are so atypical. I'm always curious, what put you on the path, this particular path? I mean, how did you get to where you are? What made you choose this as the path that you wanted to walk, when there clearly couldn't have been a lot of people around you that looked like you, sounded like you, identified the way you do in the world that you're now operating in and trying to change?
No, that's a great question. So I'll kind of go back a little bit. So before, I get into that specifically, I just want to say this is actually a full circle moment for me, because I grew up reading Black Enterprise. So I've been a fan of Black Enterprise since I was a kid. My dad would bring it home from the office and I would read it to cover, and we would talk about what was in the magazine. So just I grew up reading Black Enterprise and looking at people that you would cover, and just was like, wow, these are Black people who are successful, and I want to be like that one day. So just with that, full circle moment for me. So thank you. And that the magazine inspired me. So, for me, I've worked in different industries, and former lawyer, left the practice of law to go work at internet startup companies. And this was, when I say internet 1.0, when the internet was just coming out. And now, I mean, it's ubiquitous. Everyone uses the internet, but, at one point there was a time we didn't have it. And so I knew that the internet was here to stay. And I knew there was going to be a convergence of technology and entertainment. So I came from the entertainment world. I was an entertainment attorney, represented some big, artists and celebrities. And so I joined an internet company, startup company, and it was an Israeli company. They had this great technology, and that was my first lesson in product market fit, because we had a great product, but the market wasn't quite there yet. And so we were a little ahead of our time. But we did have investments. We had investments from GE Ventures. And so, we were this like startup company, but we had money. And although, we couldn't quite get, the market fit for us, and, we ended up folding the company, it was a great lesson for me. And I saw, basically we had some runway, but we weren't able to close deals just because the market wasn't there yet. And then I ended up staying. I was at a crossroads. Do I continue on this path working at startup companies or go back to law? And I just knew in my heart that internet was here to stay. It was just like a interesting industry and fun, and just really just changing things, disrupting so many different things. So I stayed on that path. And I joined a company, Community Connect, which was one of the first social networking companies or social media companies. So I tell people Mark Zuckerberg was probably a teenager, and Community Connect was around him. So we had 3 web properties: Black Planet, Asian Avenue, and Mahente.
So
So
now
we,
you're talking my language. 'Cause
yeah, so
my
I'm
kids call
totally
me-
dating myself.
No, my kids call me a social media OG. My second oldest daughter,
Right.
Christine.
Yeah.
You're a social media OG. Dad, you were doing this way back. And my
Right.
first
Yeah.
experience when
And now
I
the
had
kids
no
got
idea it would have anything to do with my work or my life. I was living on blackplanet.com. I was like that. I just was fascinated about being able to share and connect and to, and it didn't matter where we were geographically, and had no idea that, less than 7 years later, that would be important to my work and to even my professional and career longevity. I was one of the first magazine editors, black or white, to officially represent a magazine as a magazine leader on social media when I had my MySpace page in the early 2000s. And
Yeah.
my colleagues were like, "Why are you doing that?" And I'm like,
Right.
You're
Yeah. So with Community Connect, we had investors, and that company went on to be exit and be sold. And I joined another company called Select Minds, which was actually more of a business to business B2B software play. And so in all those roles, I was doing business development. So all the internet startups, I'm doing basically sales and thinking about strategic partnerships where we can generate revenue. And so Select Minds was an interesting company, basically creating social network for companies. So it was a, business play. So, kind of starting out alumni program. So, people who worked at a big law firm or professional service firm, just keeping in touch with them. These alumni who may go on to be decision makers, may buy their services, or you may hire them back. So that was the premise. And so really great experience. And that company was sold to Oracle. So all of these companies were funded. They had, some funding. They all started out small and at some point grew. One didn't do well and folded. And then the other two were ultimately exited. So I saw, the power of being well capitalized and having investors, having a board, having, people who are, bet on your company and to help you succeed. And so that was kind of my first lesson in just the capital kind of private equity and how that works in this country. And I had never been exposed to that. And then, I left startup, went back to law firm life, but working at big global law firms, but heading up business development, for these law firms. But then, I was missing a startup world, wanted to not necessarily go back and working into it, but just wanted to have some connection to it. And one thing that happened, I was watching a CNN program. Soledad O'Brien had this special program when she was on CNN called Black in America.
Yes,
and
yes.
She had a program on the New Me Accelerator, which was an accelerator program for entrepreneurs of color. And basically they were out in Silicon Valley and they had mentors. And then she said during that program, which really stuck with me, that less than 1% of VC funding would go to Black founders. And so let me remind you, I had worked at startups, they had been funded, and I knew what it took to launch a company, and then, from an idea inception to building it. And then you need funding unless you can self-fund it. Most people can't. And I just thought that was a travesty. And why is it that, less than 1% of Black founders would get funding? And I knew that, there are a lot of Black founders who are smart. Community Connect, was a diverse team, smart. And just, I just thought that was abysmal. And so at that moment I said, I'm going to start investing in companies, diverse-led companies. And so great. Okay, I have a legal background, business development, marketing, never, short of I invest in public equities and stocks and mutual funds, but never in a private company. And I didn't even know how to begin to do that. And so I tell everyone that the universe conspires, because literally 3 weeks later, there was an email newsletter I got called Daily Worth for Women in Finance. And they featured a profile on the CEO who had this organization called Pipeline Angels, which trains women to become angel investors. So I went on their website, read about it. I applied. They were having a cohort, a next class coming up, in a few months. I applied and they accepted me, and that kind of launched my angel investing career 7.5 years ago. And so I went through that program. We had mentors, how to learn how to perform due diligence on a company, how to determine a valuation of a company, all of these different things that you need to know as an investor. And that was just really just such a great experience for me and actually life-changing for me. And, you know, started investing after that, invested in a lot of different companies. You know, actually, I was actually featured in Black Enterprise right after I graduated. And, you know, there were not that, at the time, there weren't that many Black women who were angel investors. So I was featured in Black Enterprise, and, you know, that just through there, just kind of built my profile and, you know, started speaking on this topic and why it's important to invest in women and diverse founders. And then I connected with a company called Portfolia because one of the women in my cohort in Pipeline Angels said, you know, hey, I'm, you know, partnering with Portfolia. I'm going to be a lead investor in this fund. We're basically bringing together women angel investors and creating, you know, bringing them together and creating funds with the money that they, you know, invest in on different, you know, different categories. So the very first fund was Rising Tide, and, you know, invested in every different types of industries. And so I was like, yeah, that's great. I can, by investing in this fund, think of it like a mutual fund, I'll get into 8 to 10 investments. I diversify my risk as opposed to just investing in one company, which could be a lot more risky. And so just love the model. That was 5 years ago, and made an investment. We had an exit in that fund, which is pretty remarkable. You know, Portfolio's only been around for 5 years, and we had an exit. I invested in their enterprise software fund about 3 years ago. I think it was about 3 years ago, and had an exit in that fund as well. And so that puts Portfolio in the top, you know, 25% quartile of VC funds. And so, you know, although I was making, you know, investments, direct investments, I really loved the Portfolio model. And I thought with having a fund, you can have more of an impact because you can write larger size checks. So I wanted to start a fund. Trish Costello, the founder of Portfolio, said, you know, hey, why don't you think about, you know, using our platform? So basically, you know, community of investors, market, you know, she's got the marketing arm, you know, kind of the back office of running a fund, you know, investment associates, all like, think of like all the things that to run a fund, you know, you've got to have, you know, be compliant, you have to have fund formation, a back office. She basically creates that platform and that network. And so, yeah, we came up with the idea to launch a fund, you know, took 3 years in terms of just, you know, getting it to the right place. She is incredible, and she ran the Kauffman Fellows program, which is part of the Kauffman Foundation program, Kauffman Foundation, which actually the Fellows program trains VCs, and some of the top VCs in the world have gone through that program. She always, at the very beginning, she ran it for about 20 years and launched it. She always, every class, made sure she had a third to be women or diverse folks who were in it. And so I'm happy to say all the women who are in my fund are Kauffman Fellows. Wow. And, you know, we're all women of color. And so that's how I was able to get these great women to be a part of this fund and this vision. And so Trish and I worked on the fund, and then, you know, help recruit these amazing women who are my partners. And you mentioned Nora May, Kadina is one of them. Daphne Dufresne is one. She ran Bob Johnson's private equity fund, and now she has a fund that's a nearly $2 billion fund. And she's focused on private equity and middle market investments. She's absolutely brilliant. All the women are brilliant. Juliana Grazer, also Kauffman Fellow, ran Texas Medical Ventures, you know, Houston Angel Network. And then Karen Carr was managing director at GE Ventures and ARC Ventures. She was the youngest person ever to get a PhD from University of Chicago. Wow. Yeah, and so she's done endless technology deals. So, you know, this is like an A team, like world-class investor A team.
A powerhouse lineup right there.
Yeah. So, yeah. And then myself, I told you my background, and just been investing for 7.5 years on the angel side. But, you know, I've been, you know, worked at different companies. So as an operator, so I bring that experience, and then my legal background and business development. So really, you know, a kick butt team we have. And we're the first fund that's led by a team of all Black and Latinx women. Yeah. So a VC team in the country.
So listen, I mean, you know, the reason why I've always, you know, even in my, you know, I mentor entrepreneurs. I teach a master class in Newark around wealth and entrepreneurship on my own, and of course my work for Black Enterprise. And the reason why you've come up a lot of times in my conversation is that when I talk about, you know, the quote unquote, you know, lack of Black capital, which is obviously a perennial topic in the world of entrepreneurship, particularly among Black entrepreneurs, one of the elements I've always emphasized is that you got to deal with the other part of the equation. And now that we have at least one generation, maybe two, of African Americans who may never start businesses, who may never become an entrepreneur, but
Right.
who have achieved some level of financial, career, professional success, that they can at least afford to be angel investors. And
Right.
that part of the solution is that we have to grow the number of, I'm an example like that. I may never start a traditional startup,
Right.
but I may generate enough income on my own out beyond my 401k and my stocks and bonds to say, you know what, a certain percentage of my portfolio should be angel investors. And that's why, we feature pipeline angels in Black Enterprise and at our events, and obviously you, in part because I'm passionate about this idea that we got to plant the seed in the minds of more people of color, African Americans in particular, who may just have made a good living professionally, and they really could afford to be angel investors, but it never really crosses their mind. And
Right.
until we make that part of our DNA as a culture, it won't solve all of the, capital access problems for Black entrepreneurs. But this is a big part of the answer, that more of us have to think about, putting that toward that portfolio. So in your experience as an angel investor, and I do want to shift back into the VC conversation, what has been your experience in getting more African Americans, more people of color, more Latinx people, women, to think along those lines, that I may never start a business, I may never want to, but I had a 20-year career as a lawyer, I had a 50-year or 30-year career as a successful corporate executive, or maybe I do have a successful business, but I now making so much money that I can do something else at a certain stage in my life. What do we need to do to kind of get that conversation to be more of a natural conversation, so that we can contribute to the capital pool for Black entrepreneurs?
What we're doing now, I think it's really exposure. I didn't know anything about angel investing, and, that wasn't something that, I grew up around or had heard of. And it was just through my working at, startups and then being exposed to that. And, that's how I heard about it. So it's really just with anything, it's exposure. And so you're absolutely right. Like, not all of us are, created to be an entrepreneur, and just, and entrepreneurs are a certain breed of people, and, and it's great. I mean, we need entrepreneurs, and we actually have a lot of Black and brown people who are entrepreneurs. It's the fastest group of entrepreneurs. Fastest group of people who are becoming entrepreneurs, but not everyone's cut out for that. And so,
Right.
We have professionals, we have doctors, lawyers, whatever, someone who worked in corporate America who can be an accredited investor, which is defined by the SEC. You have to make a certain amount or have your net worth be a certain amount, who can actually invest in this asset class. So, I think programs like Pipeline Angels is shedding a spotlight on that this exists. And in fact, a lot of, I know the founder, Natalia, is really focused on bringing in women of color. Every year cohort, she reaches out to the alumni and say, can you recommend, women, particularly women of color? And I've done that, and, recommended people who've, become a Pipeline Angels member and taken the course and gone through that. So it's really exposure, and, just the more that we're doing stuff like this and getting the word out that this exists, it's important. That's why I love the portfolio model, because, same thing, women, so as a stat, and unfortunately I don't know the stat for African Americans, but of women who are accredited investors in this country, only 0.5%, so not even 1%, so 0.5% do angel investing. If you look at men, of all accredited investors who are men, 30% of men invest in this asset class. So, so Portfolia in itself, she's, trying to shift that. And so, by, in a few years, she want 100,000 women investing, in at least one of the funds. So being exposed to this asset class. And with that, a minimum investment of 10,000, look how much money that'll flow. You're talking about, something like, I guess, $1.5 billion or something. That, that's incredible. And with 1.5 billion, you can really make changes and, invest in the companies you want to see in the world. And that's the thing is, again, back to the original question you asked about, it's not level playing field that, the best companies are invested in. That's not true, but if we get more people who are diverse, women, all kinds of people who are investing in this, more companies, will be invested in. And also, I would say, these traditional VCs, they're investing in certain types of companies. I think about certain companies that exist out there. So think about, I give example, Rihanna and her, makeup line, Fenty, her brand. Think about, you have the Revlons and all these big companies of the world. Some of them were starting to target women of color makeup, but she really, created like 40 shades of makeup. And when she launched, you have people lined up outside of Sephora and like all these, businesses, retailers to buy her makeup line. And so obviously there's a huge market. And then within a few months, she made like, the revenue was over $100 million on makeup. And so these are huge markets. People seem to think that, these are niche markets. If you look at the ethnic market and the LGBTQ, these are $7 trillion markets, the combined market in terms of consumer spending power. So these are not niche markets. These are massive markets, in some cases larger than countries in the world. And yet, some products and services that cater to those markets, if you're a traditional VC, you're not familiar with it. So you wouldn't even probably know how large the addressable market is. So then you're not going to invest in it because you're not familiar with it. And so these companies don't have a chance. And also these products that can benefit people of color or other people aren't even on the market. And so, it's a larger kind of issue. And then entrepreneurship is the most direct path to wealth creation in this country. Yeah. And, so if you have companies that aren't getting funded, by definition, these people, certain groups of people aren't going to have access to wealth and wealth creation. And we know there's a massive wealth disparity in this country, that goes back from the beginning of this country being formed. And so, a way to get out of that in one generation is through through entrepreneurship and generating wealth. So these are, really important.
You mentioned at the top of the conversation, which something I think is extremely important, and that is, it's not just gaining access, whether it's getting into a top school or getting into a great company or even living in a great community. It's the capacity to build relationships within those communities or institutions. And so, you often, I went to a great institution, Rutgers University, very proud graduate, but it was only after I graduated that I gained an appreciation for both the ability and sometimes the inability to build the kinds of relationships that will propel me forward once I graduated. And I raised that because one of the entrepreneurs I mentor is a great natural hair care business, and she talked about the challenges of pitching her business, in this case, the Angels, who are all white men with bald heads and who had no way to identify personally with what the market she was serving, why it was important, why this was a great business risk, why it was a great investment. And the problem wasn't the numbers on her deck, or it was you're pitching to people who like what? And so I'm excited about your fund, not only because of the quote unquote diversity quotient, but because great ideas will get in front of people that can say, I get that. I get that market. I understand this is not a fringe or a niche market. It's a real big opportunity. So talk about the companies that New America Fund has invested in, because you guys have already made a couple of investments. What those investments, why you're excited about that, and what that could mean for this potential around wealth creation, as you said, through entrepreneurship.
Absolutely. So we've already made 2 investments. We're about to make another investment shortly. But the 2 investments we made, so let me just back up, just give you the thesis of the fund. So the fund is, basically investing in companies with at least one founder is diverse. Definitely looking at Black and Latinx founders, but at least one founder is diverse, or LGBTQ, or products and services that either cater to those markets or solving a problem that over-index in those markets. So the very first company we invested in was Mocafy, which stands for Mobility Capital Finance. Really great company for us to invest in. The founder, Will A. Coxum, he was an executive at JP Morgan Chase, also Willis Insurance Company. And the the impetus or the inspiration for him to launch Mocafy was, after Ferguson and the shooting in Ferguson, a number of years ago, 5 years ago. He had worked in banking, and he worked in banking and saw in consumer how there are a number of people who are underbanked. And so what that is you don't have access to banking products, or you may have access to it but can't afford it, or and there in the United States, just in the US, 88 million people are underbanked. So think about it. You get a check, you need to cash your check. Most people go to the bank and deposit it. 88 million people don't have that ability to do that. So what they do is they go to check cashing places, which are predatory. They may take 20-25% of their check. And so they don't have, banking, just basic banking products. A debit card, a credit card, you go on Amazon, you need a debit card, or you need a credit card to purchase something. So think about all the things that most of us take for granted that have bank accounts. We have access to financial products. There are 88 million people in this country that don't have that. And of those 88 million people, 50% are people of color, particularly Black and Latinx.
Wow.
So he said, you know what? Again, back to this, wealth disparity, all these just disparities. If you don't even have a bank account, you're not building credit history, you're not building, any of these things, and access to, borrowing money that you can repay over time, you're already at it. You're several steps behind.
You make a point, just to interject. Even just during the pandemic and being, sheltering in place for months, and you mentioned if you don't have access to financial tools that you could use, even just for Amazon or ordering anything, just getting services and goods to your house or your home, wherever you're in an apartment, is would be a major nightmare of a logistical challenge if you literally got to stay in the house and have everything brought to you. And
Right.
When you said that, I'm like, how spoiled.
I didn't even think about that. You're absolutely, if you think about, all of that. And so he came up with an idea of creating a digital bank. Obviously he came from JP Morgan Chase, so he knows regulatory and compliance, and he's worked in this space. So it's not like, that's another thing is, he has domain expertise. He happens to be a person of color, a Black man, and he saw there was a need in his community. And so taking his wealth of knowledge, his domain expertise, and created a company around that to solve this problem. So basically you have a debit card, you can deposit, if you get a check, you can deposit into your account, all digital. So you take a picture, deposit in your account, by using a debit card, there's no fees. He gets a fee in terms of, when you purchase things, a percentage of it, but not predatory or anything like that. And then the other thing that is really brilliant that he came up with is, a lot of these people they don't own a home. Let alone, they don't have a bank account, so how can they own a home? And so, so they're rent payers. So you pay your rent, say you pay your rent on time every month, that's not building your credit. So he partnered with Equifax so that when you're paying your rent on time, you're actually going to now be building your credit. So he's coming up with these because he worked at a company and he worked in financial services, and but he has a different perspective because he's a person of color, and he saw that this was a need in his community. And so he came up with this great idea, and it's been around for 5 years. And actually with the pandemic, it's helped him, because for him to acquire customers, which is the most expensive thing to do, he came up with another creative idea, is to do it through, through cities. So people are issuing municipal ID cards. So New York City is doing it, Newark is going to do it. So various cities throughout the United States. So he said, you're issuing the municipal ID cards. Why don't we bundle my debit card into those municipal ID cards? And so that's another way for him to acquire customers. With the pandemic, people got these stimulus checks. Guess what? They didn't have bank accounts. So guess what? They have to go to check cashing place. Guess what? 20-25% of their money is now being taken by check cashing place. So now the cities are saying, we need your product right away. Like, what you're doing is amazing, and we'll hire your company to do, create this platform for our, for our, digital bank for our cities. So actually that's an example of COVID and the pandemic, helping his business. And so that's one company, and we're really, proud of.
That's why I want to be you, because I just love looking under the hood of entrepreneurship and seeing these ideas come, and then you connect dots. And so you have the life. You have a life. But talk.
Oh, it's, I mean,
More.
it's great. I mean, what I love is there's I mean, there's so many great companies, and, you know, wish we can invest in all of them. But, you know, at the end of the day, you know, we have investors who are investing in our fund. And so we want to make sure we're going to get a return on investment for our investors who took a, you know, took a chance on us. And I'm so grateful and so glad that they did that. And, you know, it says a lot about the team that we have and, you know, the team that we have, and we have a great team. And so we want to make sure we get a return for our investors. So we want to invest in the best companies that are out there. And so Mocafy is one example, and just, he's doing great things. He was in the New York Times, you know, a few weeks ago. He was on CNBC. So this is, you know, I mean, I think right company at the right time, great leadership, you know, and the wealth disparity has just been, you know, just been unveiled with this pandemic, and then Black Lives Matter. And so he was there, you know, started that company 5 years ago, and now is benefiting from people shining a light on this disparity, which is great. So that's one company. The other company we invested in is a telemedicine company. The founder is, you know, she's actually white. She's a woman, white woman. And, you know, but again, this goes into our investment thesis of a company where, you know, even though the founder is not a person of color, but what they're doing impacts our communities, and they're having providing a solution for a problem in our communities. So telemedicine for women and families, focus on women who are having kids, whether it's they're giving birth IVF, or, you know, adopting. And so basically she started her company out with, it's a business to business play as an employee benefit for companies. What we loved about it is she, you know, signed a deal, part of Massachusetts Medicaid, to provide this service. So people have providers that they can access telemedicine, so they don't have to physically go to the doctor all the time. So they have more access. She has providers that speak over 20 different languages, and also different ethnicities. And so I don't know if you know this, but in childbirth, Black women are 10 times more likely to die in childbirth than white women. So this is obviously a big issue. And so having access, making it convenient for people to have access to OBGYNs, midwives, you know, by telemedicine, just, you know, will hopefully reduce that. And so what we loved about this company is that, you know, she was solving a problem that disproportionately affects our communities. And so that's why we made the investment. This company, you know, amazing company, you know, $45 million round that we were able to participate in. A fund of our level would never be able to get into this type of company. Sequoia and Oak led the round. Sequoia, they're one of the top VC funds. So the portfolio, because we had 4 of our funds co-invested together, so we were able to write a check together. And what she liked about us is that a third of our women who are in our funds, we have about 95% of our people who invest in our funds are women, 5% are men, but a third of the women are doctors. And so we were strategic investors for her. In fact, her round was closed, and she opened it up for us to invest. And what I say is the benefit of what we're doing is not just financial capital. I call it the 3 C's of capital. So it's financial capital, you write the check. That's what we did. Also social capital. So back to the network, you know, we have networks, the people who are, you know, the lead investors like myself, but also the people who've invested in our funds. Some come from corporate America, or executives in corporate America, or, you know, different people, pretty prominent. They're able to open up doors and give access to, you know, people that we invest in and help them. And then the third capital, or third C of capital, is human capital. So we have, you know, ourselves, and also people who are investors, you know, they have domain expertise in a particular area. You know, they're able to, you know, help out these companies, and, you know, for free, and just because they invested in, we want them to succeed. So that's always also important. So, and we just want these companies to succeed, because they're not so many of them, and we want to make sure that they succeed, because then they create wealth for their employees, for people in their community. I mean, think about it, you know, if we can find a Mark Zuckerberg, you know, the impact that that person of color can have. Look at Robert Smith, what he's done with Morehouse, and, the graduating class, they didn't have to worry about paying back student loans. So imagine, what those individuals can do. So it's a network effect in terms of,
And a multiplier effect that we really want to achieve.
absolutely. And so we need to do that. And that's why it's so important that we support these founders of color, and also society as a whole will benefit. So,
Yeah.
if a white person is like, well, how will I benefit? It's not a zero sum game. It's like everyone will benefit. So, if the tide rises, if the tide rises, everyone, rises, all ships rise. And that'll benefit, everyone. Our GDP will increase, more money will flow into our economy, all of that. So,
All
it's
communities become healthier, and healthier
absolutely
communities cost less to run and maintain.
right. And I mean, think about it, like the health disparity, don't you want to have people to have access to healthcare? It costs money to have access to healthcare. Don't you want people to have great education? You want to be in communities where, people can pay their taxes to afford to have great schools that will, those tax dollars will flow to those schools. And then those kids will go on and go to college, and then some of them become entrepreneurs. Some of them will, join companies and do really well. And so all of us as a society will benefit. And why should it that only one group of people have benefit? I mean, it's just doesn't make sense to me, particularly
We
when
don't all benefit, then it costs all of us, whether
and we're seeing that in this pandemic.
Absolutely.
No one's immune from it, but people of color are disproportionately being affected by it. But yet, but the bottom line is, no matter, it doesn't, COVID doesn't care about your
we're affected first, but the ripple
right.
effects throughout the society are inevitable. And so you could say, well, it's not hurting me now, but it's going to hurt us as a nation and as a world, which is why this is important. And your 3 C's really dovetails strongly with my passion again, that I tell African Americans who have the means, you can start a fund, you can invest in existing funds, or you can use your influence on corporations, institutions around you to channel capital and support toward funds that will create capital access and opportunity for African American businesses and Black.
Absolutely.
So in the time we have left, I want to broaden the conversation a little bit around this idea. Now we see, again, in response to the current environment, corporations announcing major initiatives, $100 billion, $25 million, $100 million. The numbers are from corporations about, we're going to earmark this money to support Black businesses and support Black entrepreneurs and create economic opportunity in Black communities. In the aftermath of both the impact of the pandemic and the disparities that it's revealed, as well as the call for racial equity and social justice in the aftermath of the George Floyd killing and the Black Lives Matter movement. And so we see this window of commitments and pledges of large amounts of money. And the big fear, the big concern is, one, how long will this window stay open? But even more importantly is how much this money that's being pledged will actually make it into the accounts and to Black entrepreneurs on the ground who have heard these kinds of large pledges before. I mean, it's easy to pledge. It's a lot harder to get the delivery of that money to the businesses when it counts. What do you see happening about, and what do you see the thing we need to focus on now and going forward as we move through this current chapter in our nation's history?
Yeah, I mean, I think you're right. I mean, this window, it's a shame that we're saying this window is open, and how long will the window be open? I mean, well, first of all, there should have been a window. It should just be how it should be. And the window should hopefully be perpetually open, and not even a window, but a door, like just so that whoever wants to come in the door should be able to come in the door, as long as people are hardworking and have access to things. And, but obviously that's not where we are. So yes, I mean, I do think I'm cautiously optimistic. I do think that people are looking at this right now. It's interesting. Some people invest in our fund. They said, we didn't know you existed, and we're glad to know you existed. We've been looking for opportunities to make this investment. So a lot like what we're doing is raising awareness about that my fund exists. I'm one of many funds that are, around for, Black fund managers, which is great. When I started investing, there were barely any. And now, I wouldn't say there's a lot, but there's, a good number, a decent amount that are out there, and they've raised money. So yeah, I mean, I think there needs to be awareness of this. I think there's a moment of this right now. I hope that we can continue. I hope it's not just, a flash in the pan. These companies, there's a lot of companies making these pledges. I don't know who's going to hold them accountable. So that's the thing. It's,
Yeah, well, that's kind of part
it's
of
not
our
check
job
the
at Black
box.
Enterprise. We got to do something. I mean, us in the media. I mean,
Everybody. I
yeah,
mean, I think
we do have to pay attention.
it's imperative of everyone. So my fear is that a lot of this is just, kind of PR, just showing that, hey, because everyone's doing it. I don't know about you, but I'm sure um, I got a ton of emails about pledging for all this, or just, we'll give a donation to this organization. I mean, okay, fine. But we need to really address the systemic racism in this country. And so, there's social stuff. My lens, and I, agree with all the social stuff, of course we need that. But I've always been about, we need to create economic equality in this country, because if we do that, a lot of the problems that we have will be solved. And so for me, it's like I feel like the quickest way to generate wealth in our community is to fund entrepreneurs. And that's been my thing. And, I know a lot of wealth creators. I've had the opportunity to get to know, some very wealthy people in this country through some stuff that I do. And it's and most of them are, not diverse. And I've learned from them, and I'm really fortunate to have that lens and have that network and understand that. And a lot of them were first generation wealth creators, but they had a great idea, and they sold their company, and now they have a lot of money, and they have nonprofits and different things that they're able to fund. And so we need to do that. And so, that to me is the path for it. And so I just hope that these companies who've made these pledges are really going to stand behind that. And I just worry about, who's going to hold them accountable, and maybe, Black media and other groups and nonprofits, and, hold them accountable. And, and myself, I mean, one of the things we're doing right now is we're reaching out to companies who've made pledges, and we're saying, invest in our fund, because you made this pledge. That's great. You should invest in diverse entrepreneurs, but do you have the infrastructure to do this? Like, again, back to, do you have people that look like myself who are going to evaluate these deals that are coming in, and who you should fund? They may, like a company, Black hair company, and they may say, oh, well, is that a market? And may not even see why that's something that's a viable business. And so we want to make sure that there's representation. And by doing that, you give us some of that money, we'll find those companies, and then we'll invest in them, you invest in them. And, so coming up with different ways of going about doing that. And so, yeah, so I hope, I'm cautiously optimistic. I think the change with now what's going on, because we've heard these things before, is that there's a lot of non-diverse people who are out there marching, who are talking about this. And I think that I'm cautiously optimistic because of that, is that, there's now awareness and of that. And so there are people who don't look like us, and we need to have that, people coming up and standing up and talking about this. So we'll see, but we're certainly doing everything we can to, have those conversations and get people to look at us and to hopefully invest.
Well, you're doing the work that, again, we could talk about windows opening and closing, but your work is important. The work of your colleagues and the New America Fund is important. The Rising America Fund is important because you were doing this work anyway.
Right. Yeah.
Even the company you invested, both of the companies you invested in, they were doing the work they were doing that made them viable companies. And the window opening up only shed a light on, you need a fintech company that does this. You need a telemedicine company that does this, because both of these, what my boss calls the twin pandemics of systemic racism and coronavirus, dovetails into the kinds of businesses you were investing in already, that the current environment is showcasing that need. So that
You're
to me,
absolutely
systemic
right.
change
Yeah.
is what you do when there is no window open. You're just
Right.
doing what you do.
Yeah. And I mean, I think there's a lot of jumping on the bandwagon going on right now. And so, one of the things we said is, I mean, all of us have been investing, for, collectively, I mean, Daphne and Karen investing for more than 20 years. I mean, I've been investing for 7.5 years. I'm more of a newbie investor, in the group, but I was doing this with my own money, like, 7.5 years ago. And we launched the fund before any of this because we knew this was important. And yeah, so, you've got VC funds that are popping up saying they're going to start investing in this. And actually, I think that's great. Good for them. But like, make sure you have hire people of color to look at the deals and to navigate the deals, and then give money also to funds like myself who are, boots on the ground. We have a reputation already in these communities. We can help vet these companies. We can co-invest together. So that's what we're looking at. And I think, I just hope that, people who are starting to do this and realize that they need to put money behind this. VC funds, companies are going to not only, I say, not only wire the money, but hire. Also, you got to wire and hire, and so hopefully they're going to do that. And hopefully people will hold them accountable to that. And we'll see what happens with all of this.
So let me close out our conversation with a message from you to entrepreneurs, Black entrepreneurs, about, and again, it doesn't have to be a long thing. We could probably do a whole separate show on this topic, but what is your message to Black entrepreneurs in this environment to be ready for the opportunities, to be ready for angel funding, VC funding that may not have been available to previous generations of entrepreneurs, but is becoming available now? But obviously, performance and preparation is critical on that side too, because you're right. You're looking for good places to put the money to make it profitable for your investors, and also to create a track record of success that will attract more capital to these types of businesses.
Yeah, I mean, we'll address, two things. I mean, so there's two types of companies actually. I mean, we're looking for high growth VC investable type of companies. And yeah, so, if you're already have a product and service out there, send them my way. Reach out to me. We'll look at them. Really just make sure you cross your T, dot your I's. What I would say is, have a product or service that you've tested out and know that there's a market for it. Back to like what I talked about, the first startup I worked for, we built this amazing product, but there was no market fit for it. And that was my very first lesson. So always, is there a market for this? Have you tested it? And make sure you're able to do that. I do think this is a somewhat of a watershed moment. I think people are looking for great founders. It's still, hard. Let's not be unrealistic about it. Right. So those are those type of companies. There's a lot of companies, what I call lifestyle businesses. So these are companies where people make money. They're an entrepreneur. They are funding their lives, their lifestyle. That's how they make their living. They're not necessarily going to be like this mega big company that they're going to sell or go public. And there's absolutely nothing wrong with that. And most businesses in the United States are like that. Regardless of, to get VC dollars, even if you're white, it's very few companies get VC dollars. And then you've, put on the fact that you're a person of color. But there's companies that are not like high growth. Think about, a hair salon, think about, a florist, think about you have a childcare type of business, that kind of thing, or endless other types of businesses, but just, you can make a living off of that, decent living. You can actually hand it down to your, your family, next generation if you want, or sell it eventually. So, those companies, unfortunately, we heard about the stimulus, a lot of those companies that were Black founders, Latinx founders, the PPP dollars did not go to them, which is abysmal. But, a lot of it is like, make sure you have done your taxes. You need to have banking relationships, again, network, all of these different things. And so that's all important. But yeah, that's the advice that I would give. And also I would just say, find a mentor, find someone who can help you. And I would say, actually, I would say this is the best advice I would give right now, because we're in this watershed moment. There's a lot of people who have, and not even approaching them to invest in you, but want to invest their time. Back to the 3 C's. They have social and human capital. So leverage that. And once they get to know you, they may actually be in your board or advisory board, or may even write a check. but they got to know you, they see your work ethic. So you know what, leverage that. There's a lot of people who want to help entrepreneurs, particularly entrepreneurs of color. Now they see what's going on. And so I would say try to find a great mentor who can help you with regard to that and bring them on board. And, not necessarily thinking I'm going to get a check from them, but think about, how they can help your business right now. And they can open doors for you that may not have been open for you in the past. And I'm seeing that with the fund that I have, just people have opened doors for me. Some have invested in the fund. And it's been incredible. And, just when COVID hit, I was thinking I launched this fund at the worst time, like after 3 years prepping and getting it ready. And then, all this stuff happened with Black Lives Matter. And actually it was like the perfect time. So.
Yes. You hit on 2 points as we wrap up that I'm constantly telling entrepreneurs. One, your conversation about market fit. And I talk to so many entrepreneurs who confuse need with demand. And I'm like, no, you got to find demand or create demand. Lots of things we need, we won't pay for.
Right, exactly. That's
so, yeah, you may say, oh, the world needs this, but I said, but they're not asking for it and they're not willing to pay for it. And the second thing you said, which I think is the most important and a perfect note to end our conversation on, whether you're looking for VC money, angel investor money, or, I meet a lot of entrepreneurs who are pitching for $10,000 prizes or $25,000 prizes in pitch competitions. And I tell them the most important thing is not the money you may or may not win. It's the relationships that you can get. How many times do you go to meet an angel investor or a banker or a successful entrepreneur who didn't give you the $10,000, but is willing to talk to you now that they met you because you pitched. And I know so many people who lost so-called pitch competitions who became successful because they took advantage of the relationships they gained at these conferences and events and ended up with way more than the person who quote unquote won some money. So your point about relationships, networking, and access to people that can help you, mentor you, connect you is way more valuable, and will ultimately lead to more investment if you're ready for it.
If we have 1 minute, I'll give you a quick example. A company, Tastemakers Africa, I invested in, was one of the first investors about 5 years ago, I think now. So I met this company through someone who was a lawyer who was doing some work for her. And she's like, meet this entrepreneur. I met her. She was a little too early for me. This was like before I had the fund. I was making, writing direct checks. Then she pitched Pipeline Angels, and they were going to invest in her. And through the Pipeline Angels network, any alumni can invest in those deals. And I was just so blown away by the progress she had made in that short period of time. So I said, come to my office, and we met, and I said, I'm going to invest. And that's a great example. But then because I've been an investor, I talk about her company a lot. I think it's an amazing company. She actually closed around 1.5 million in November. And the person that the VC from Precursor Ventures that led the round, I introduced them to her. So the introduction that happened a number of years ago, I actually didn't initially invest in her, but we kept in contact, and then I saw like her progress. I ended up investing, and then I referred her to the lead investor for her $1.5 million round. By the way, Precursor Ventures is a VC firm and fund that's led by African-American man. So full circle, all of that. And, I think that's so important that a lot of people are focused on getting that check. You got to get that relationship as well. That's really important.
Perfect piece of advice to end our conversation on. Thank you so much for joining us on Beyond the Hype. I knew this was going to be great. It did not disappoint. Thank you so much. And please stay in touch. Keep us posted on what's happening with the Rising America Fund. I'm still going to be paying attention to you. Tell Norman May I said hi.
I will. Thank you so much. And keep doing what you're doing. This is so needed. Black enterprise is so needed.
Thank you so much.
Okay. Take care.
Welcome, everybody. You've been listening to Beyond the Hype. I'm Alfred Edmund Jr., SVP Executive at Large at Black Enterprise. Thanks for joining us.